The Forex terminal just blinked a new rate update. A shift in the pair, not major, not obvious, but it was there. And the moment it happened, volume surged quietly because the elite, they saw it. They've already made their move. And now, you have one chance to catch the wave before the rest of the world wakes up. Today's episode focuses on something big. Recent confirmed IQD movement on Forex listings, why elite traders made quiet early moves, what this means for you, especially if you're holding IQD or VND, and how to position yourself before the next phase begins. Let's start with a little story. Welcome to the Currency Corner update, where logic beats headlines and timing beats hype. It started like any other trading day. A Tuesday, markets open, nothing special. But around 2:13 a.m. GMT, something peculiar began to unfold, not on the mainstream Forex charts, but across three lesser-known institutional terminals used primarily for quiet trades and shadow liquidity operations. A subtle spike emerged in the IQD-USD price spread. Nothing that would ring alarms at a retail level, but to those paying close attention, those monitoring the narrow lanes of suppressed asset classes, it was the equivalent of a flare shot across a dark financial sky. At first, the movement seemed like routine volatility. The ask widened, the bid thinned, and data streams began to diverge from typical pricing logic. But then, within just 12 minutes, something undeniable happened. Algorithmic trading bots started firing off by sequences. Volume surged. Not retail volume, this was high-frequency accumulation, quiet and coded, happening in packets that wouldn't be noticed by the average Forex trader. The kind of volume you only see when institutional triggers are activated, when the hands pulling the levers behind the curtain are told to start loading before the curtain is drawn back. This wasn't a glitch. This wasn't noise. This was a signal. And in financial markets, especially those as politically entangled and globally monitored as the Iraqi dinar, signals like this don't happen without intent. They don't appear in the middle of the night unless someone somewhere received a green light, a nod, a confirmation, because here's the truth: suppressed assets don't just wake up, they're awakened. And the dinar, long labeled as a speculative ghost currency, is being watched more closely than ever by central banks, sovereign wealth funds, and commodity-backed financial alliances looking to diversify away from the Western-controlled fiat system. That's not conspiracy. That's real-world financial chess, and the pieces are moving. The traders who moved that morning weren't guessing. They weren't gambling. They were executing based on information that hasn't hit the public domain yet, but is already echoing through Tier 1 and Tier 2 banking circles. We're talking about wealth desks in Zurich, private capital syndicates in Dubai, and select accounts in Singapore with exposure to both oil futures and non-USD emerging currencies. And if you're sitting on the sidelines, waiting for mainstream media to validate the shift, you're already late. Because by the time it's confirmed by CNN or Bloomberg, the revaluation won't be speculation anymore, it'll be history. This price movement was a warning shot, a whisper before the storm, and the elite, the ones with access, timing, and intelligence, have already made their move. The question is, what's your next play? Let's clear this up. The Iraqi dinar hasn't been fully mainstreamed on every global Forex terminal. Not yet. You won't find it prominently displayed alongside the majors like USD, EUR, or GBP. But if you know how to look beneath the surface, at the shadows where institutional moves begin, you'll see something extraordinary happening. Over the past few weeks, smaller, secondary Forex brokers, the ones often used for regional or niche currency testing, have begun quietly reintroducing IQD trading pairs. No major press releases, no ticker tape announcement, just quietly relisting the currency in a way that doesn't draw attention from the average retail investor, but sends a very loud signal to those who trade institutional volume. At first glance, it might seem like coincidence. But when you start mapping the movement across various tools, MetaTrader indicators, regional liquidity feeds, and derivatives tracing from Middle Eastern financial data providers, the pattern becomes undeniable. Bots running mock IQD USD simulations are now showing algorithmic volatility curves. These are not random fluctuations. Their algorithmic test runs strategic movements coded to simulate what would happen if IQD were fully turned on in a public, unrestricted Forex environment. Even more revealing, liquidity mapping from hedge fund analytics dashboards has lit up with irregular spikes, specifically tied to contracts and instruments loosely labeled under Emerging FX Gulf Basket. And what do you find in that basket? The dinar. Here, what that means: someone is testing the water. Not just any someone, we're talking about financial entities with deep pockets, political clearance, and strategic access. This isn't amateur hour speculation. This is prepositioning. Smart money is getting ready for a world where the IQD doesn't just exist, it competes. They're rehearsing the opening bell before the curtain even rises. And you won't be invited until the show's already sold out. These spikes, this data, the back-end preparations, they're not fantasy. They're footprints. Footprints of elite traders and policy-aligned investors moving in tandem. Not chasing dreams, but acting on information. So when your financial advisor eventually calls, 3 months too late, and tells you the dinar is finally available in a new, secure FX gateway, it won't be news. It'll be history. History that's already happened behind closed doors while the rest of the world was distracted by inflation numbers and celebrity scandals. This is currency warfare, unfolding in slow motion, one algorithm, one test spike, one quiet listing at a time. The question is, will you still be waiting for an official announcement? Or will you be ahead of it, so why now? Why is the IQD, a currency dismissed for years, suddenly making ripples across global Forex platforms? Let's pull the curtain back and look at the full stage. This isn't just about charts or trading bots anymore. What we're witnessing is the start of a geopolitical currency shift that's been in motion for years, but now it's finally cracking the surface. At the center of this shift is Iraq quietly aligning with the BRICS plus trade frameworks. While mainstream media focuses on Western rate hikes or inflation reports, something much bigger is brewing in the East. Iraq is no longer waiting on IMF approvals or Western nods to legitimize its economy. Instead, it's moving in lockstep with the global South. China, Russia, India, Brazil, and the extended BRICS alliance, who are fed up with dollar dominance and ready to trade in anything but USD. And here, where it gets real, the world is moving toward commodity-backed settlement, gold, energy, food, not fiat-backed by debt. Now think, what does Iraq have? Oil, lots of it. And now, talks of IQD-backed oil contracts are no longer just theories whispered in Telegram chats. They're being floated in private trade discussions, off-market bond forums, and elite roundtables where new global settlements are being designed. This changes everything. If Iraq starts settling oil trades in IQD, it instantly changes the role of the dinar from a restricted domestic currency to a globally required settlement tool. But you can't settle international oil contracts unless your currency is visible and tradable. That means Forex reinstatement isn't optional anymore, it's inevitable. Behind the scenes, institutional currency desks are preparing for just that. They're not waiting for CNN to confirm it. They're seeing the signs. Central bank swaps, regional liquidity updates, and the sudden uptick in IQD derivatives being quietly sold in private OTC circles. That's why we're seeing IQD price feeds reappear on MetaTrader terminals, and that's why algorithmic trading bots are sniffing around IQD USD pairs. They're positioning before the window opens. Because when it does open, when oil starts trading in IQD, the price will already be repositioned. This is how elite currency operations work. The smart money doesn't chase green candles. They move when it's quiet, when it's uncertain, when no one else is looking. They don't wait for the phone call, they make the phone call. So ask yourself, if IQD is being prepared for Forex visibility, if it's being positioned as a regional trade tool, and if oil contracts are quietly backing it, do you really think this is all a coincidence? No, this is a calculated buildup, a slow-motion currency war, and if you're paying attention, the move is clear. The question is, are you in position before it breaks wide open? We've always heard about Tier 4B exchanges, redemption centers, and early access groups. But here, what flew under the radar, the Iraqi dinar wasn't being ignored. It was being accumulated quietly through strategic oil contracts, ETFs, and dark pools invisible to the public eye. This is what elite traders do. They don't wait for permission, they create the momentum. They front-run the news, move capital behind closed doors, and strike when the public's distracted. While most saw silence in the IQD space, the truth was far more calculated. a quiet buildup of positions ahead of a global currency shift.
Hinting at major movement in the revaluation of the Iraqi Dinar IQD and Vietnamese Dong BND. This isn't just another rumor buried in online forums. This comes tied to silent shifts in central bank behavior, diplomatic movements, and sudden, unexplained data blackouts that only insiders would notice. If you've held IQD or VND for any length of time, you know patience is the game. But this leak changes everything. What's at stake? A financial reset that may completely upend long-standing global currency power structures. According to the leak, both the Iraqi dinar and Vietnamese dong have been under reevaluation, review for months, and now timelines have been activated. While mainstream outlets avoid the subject, perhaps deliberately, the internal chatter in certain banking and government sectors suggests a realignment is closer than many realize. The source of this leak is reportedly connected to an individual with knowledge of Tier 3 and Tier currency movement protocols, people who operate in the quiet, back channels of international finance. The information shared references updates from a multinational economic policy summit held off record, where Iraq's financial reform progress and Vietnam's quiet gold accumulation were key talking points. This matters because both nations have taken deliberate steps to stabilize and strengthen their economies over the last decade, preparing for precisely this type of event. What the public sees is one story: turbulence, rebuilding, and inflation. But what these leaked documents suggest is entirely different, that Iraq and Vietnam have already satisfied critical benchmarks required for revaluation. For Iraq, this includes IMF compliance, updated banking software, and a new international trade policy framework designed to support a stable and tradable currency. For Vietnam, it centers around strategic reserve building, a tighter relationship with ASEAN currency networks, and subtle yet deliberate economic liberalization. Here's the shocker. The timeline shared in the leak doesn't point to years from now. It points to the coming months. Allegedly, private exchanges under controlled environments, possibly under the now infamous Tier 4B classification, have either already begun or are imminent. These early exchange contracts are believed to be operating under strict NDAs and involve rates significantly higher than anything posted publicly. The silence from institutions like the U.S. Treasury, the IMF, and the BIS, Bank for International Settlements, is telling. Rather than denying the possibility of a revaluation, they've simply gone quiet, issuing no statements while allowing speculation to run unchecked. For savvy currency holders, that silence may speak louder than any announcement. One of the more chilling parts of the leak outlines a strategic suppression, campaign, media blackout tactics, disinformation pushes, and delay strategies intended to wear down retail holders of IQD and VND. The goal? Get the average investor to sell off in frustration or disbelief before the actual revaluation takes place. But the patience of the few may yet yield life-changing rewards. If this timeline holds true, the impact on global markets will be seismic. A revalued IQD could reshape oil pricing, especially if Iraq starts selling barrels based on a stronger domestic currency. Vietnam, a rising manufacturing power, could reassert itself as a currency stable zone in Asia, positioning the dong as a serious contender against more inflation-prone regional currencies. These changes wouldn't just benefit governments. They could potentially unleash one of the largest wealth transfers in modern economic history. Those holding even moderate amounts of IQD or VND could see returns multiplying by factors of 10, 50, or even more, depending on the final conversion rates post-RV. So what should you do? Monitor redemption center updates, verify your sources, and stay alert. Major shifts don't always come with warning bells. They arrive in silence. And by the time the news catches up, the opportunity has already passed. Remember, the same media that told you the Kuwaiti dinar would never rebound before it returned to over $3 per unit is now telling you that IQD and VND are worthless. History may be preparing to repeat itself, not in headlines, but in quiet rooms, bank terminals, and foreign policy briefings. The revaluation may already be in motion. And now, you know the timeline they won't show you, but there's more hidden in the details. The leak reveals that both countries are quietly testing blockchain-based settlement systems. Iraq has reportedly partnered with a Eurasian fintech group to create a digital dinar environment for oil exports. Meanwhile, Vietnam is running pilot programs in Hanoi and Ho Chi Minh City, aimed at integrating VND into digital cross-border settlements with regional partners like Laos, Cambodia, and Singapore. These blockchain experiments align with broader IMF and BRICS currency discussions, which suggest that any nation embracing digital financial rails will be better positioned during the global shift. This is not random. Consider this. In late 2024, Iraq announced a new set of trade agreements with Turkey and Iran, both of which allowed for partial dinar-based transactions. Although underreported, these deals bypassed the US dollar and demonstrated Iraq's growing independence. Around the same time, Vietnam quietly increased its gold reserves by 18%, moving from 9.8 to 11.6 million ounces, a maneuver usually associated with currency strengthening. The gold move alone should have raised red flags for major market watchers. Then there's the diplomatic layer. Multiple high-level visits between Baghdad, Hanoi, and Beijing have occurred in the last 6 months, with financial cooperation on the agenda. China, which has long sought alternatives to dollar hegemony, has vested interest in seeing both IQD and VND rise in status. If China offers indirect backing or trade support for these currencies, their revaluation becomes not only possible but strategic. So why the blackout? Why would governments and financial institutions sit on this information? Control. A sudden, unannounced revaluation would shock markets and potentially destabilize fiat systems tied too closely to debt. By controlling the narrative, elite institutions can manage the rollout, ensure orderly exchanges, and quietly enrich those positioned to benefit. It's not about fairness, it's about control. And make no mistake, if the revaluation is real, the opportunity window is small. Once public confirmations are made, speculative pricing will skyrocket, banks will limit access, and tax authorities will begin monitoring exchanges. Right now, you're operating in a gray zone, uncertain, volatile, but full of potential. What should investors do with this knowledge? First, verify your currency holdings. Make sure your IQD and VND are authentic, properly stored, and easily accessible. Second, stay informed through verified intel sources, not just rumor boards. Third, be ready. Know your exit plan, whether that's Tier 4B redemption centers, bank appointments, or working through trusted currency brokers. Finally, remember that this may be a once-in-a-generation event. Historically, currency resets are rare but impactful. The Kuwaiti dinar revaluation in the 90s took many by surprise and rewarded those who held firm. The global economy is entering uncharted waters, with AI, blockchain, and political realignments all converging. Against this backdrop, IQD and VND represent not just investments, but tickets to a new monetary world order. The leaked timeline suggests that the next 6 to 12 weeks are critical. If accurate, and if you're prepared, this could be the most significant financial decision you've ever made. Pay attention, because now you know the timeline they won't show you.